Welcome to this very special broadcast of Market Masters. We have a Market Master, Raamdeo Agrawal, the chairman and co-founder of Motilal Oswal Securities, and there is a reason why we've called him. The indexes are at all-time highs. 20,000 seems round the corner for the Nifty. The mid-cap and the small-cap index, after a long gap, have notched up significant gains. And what is more important is that there isn't even one foreign brokerage left. Every one of them are queuing up to give more rosier picture about the Indian stock markets and the economy. So is this a damn good long-term story, or is this a point where everyone is confident, so we should worry a little? For a person who has seen all these kinds of cycles, these questions would be very important. Raamdeo, thank you very much indeed for joining us over here today.
Good morning and welcome to this morning.
Yeah. So I wanted to ask you first about this, a positivity. Mid caps, all-time highs, small caps, all-time highs. Are you first worried that there is a bit of an overdoing in the near term, a froth?
Yeah, so I had anticipated this in the sense that didn't know about small, large and all, but I was knowing that one day foreigners have to join the this party, because domestics since COVID, because of massive onboarding of retail from 30 million to 120 million of your accounts, that has SIP boom is on at 15,000 crores per month. So that was that cushioned the sell-off by foreigners. Yes. Now that that journey is still on, retail is still on, and on top of it, now foreigners also want to buy in. Yes. First, they want to buy in what they have sold, and then they want to top it up, because now India is a far more important market in the global scene at about almost close to $4 trillion. We have 4% of global GDP. Yes. And even market cap wise, almost $100 trillion is the market cap worldwide. We're at about 4 trillion, but yeah, about 4 trillion. So we're again 4%. But their allocation is nowhere at aggregate level. Their allocation may be about a percentage or so if you see the total number. So I think there is a lot of gap between what they should be allocating in the years ahead and decades ahead. Then what is the allocation today? Whether they take the call today or they take a pause and then come after 3 months or 6 months. But I see on a 5-year, 10-year basis, one way FI flow. I mean, of course, we have to play our part of it in terms of corporate earnings and other things. And actually, there is a likelihood that market may re-rate to a different level altogether, in the sense that from 2021 P multiple, because the only way you can accommodate flow from both sides is either there is a massive boom in the paper flow from the corporates, or the market itself re-rates through 25, 26 times before, and then of course paper flow will come. So that's the kind of situation right now. Something may change.
Okay. That's an excellent start to this conversation, because these were the questions I wanted to ask you. Yeah. At the moment, what do we worry about Nifty? We worry that it is very close to its long-term average, or in fact higher, 1.5 standard deviation above its long-term average. But in euphoric times, it can go even to 21, 22 times. Yeah. So do you think that we should be worrying now that we are, above the long-term average? Can there be a sell-off before that?
Yeah, I mean, see, there's so many moving parts. But I think most important, the corporate earnings. We are right in the middle of the season.
Okay, how do you measure that? Are you happy with?
Yeah, so far, not many disappointments, but actually the banks have kind of really been fantastic. I mean, way beyond any analyst estimates. So I think you've seen the last, on Saturday.
Yeah, I see.
There a lot of, everything was around 50% kind of a growth. And and the analysts will still say there will be 17% for the year. So I think that's where the thing is. And even the cost inflation which happened because of post-Ukraine and last year commodity inflation and all, that is yet to, pass through. And I think most probably in September quarter, you'll see even more dramatic fall in the raw material cost, and hence margin expansion for the non-financial companies, consumer companies or cement companies, steel companies. You see margin expansion.
So you would say even entering at this time or continuing to increase your investment. I mean, I guess everyone is invested.
Yeah.
But continuing to top up would be your game plan?
Yeah. I mean, don't bother too much about the market levels, because this all-time high is for last 75 years. It is not for next 5 years. Okay. We are going to see significantly higher Nifty Sensex in next 5 years. Almost, I would say, double from here.
So no red flags in your mind?
No, red flags means you have to be cautious, because you can't buy anything at any price. You have to be careful what exactly you are buying. You do your research. And you are in any case topping up your portfolio in the sense that if you are 80% invested, 90% invested, you are finding an opportunity and getting into them. And I think from here, every company or every industry will move differently in the sense that everything will not fall off. Okay. There is something which has run up too much, that will fall off, but simultaneously if you see, something else will do very well. Like tech was falling behind the curve, but you see what happened in the last 1 month. Everybody was underweight on tech and they got punished. So I think the story will keep changing, and I think the whole market will keep, I mean, if both the flows continue and corporate earnings remain intact at about 25% current as predicted, I think we are in a good wicket.
Okay, I am going to come back to the market questions, but since you raised the issue of tech, I do want to discuss one or two sectors which obviously are important. Tech.
Yeah.
What would your personal view be? The guidance we got from Infosys was a bit heartbreaking, shattering, confidence shattering. What's your sense? Is it already time to dip in, or do you want to wait and see how these things, how the cloud clears?
See, this tech has a history of, it's an adaptive kind of a thing in the sense that every 3, 4, 5 years there is a new thing coming in. Like Y2K came, people came for bodies, those who can quickly sort their problem. Then came the ERP boom. Then came the .com boom. Then came the all this webs and everything online. So the 5G,
the
6G, digitization, now digital, then all this.
Now it is AI.
Now it is being talked that AI is yet another next frontier. So it is going to be different. It is going to be huge, but it is going to take time. Right now, everybody is trying to understand what they can do. And as the applications they come, I think the mandates will become bigger. Clients will also be clear what all they can do. And even the service suppliers, they'll also be very clear what kind of competencies they need to build so that clients can be taken care of.
So you personally are using this dip to buy?
I'm allocated in the sense that even before the dip, I mean, we were not grossly underweight or something like that, except that we were much more on the mid-sized ITs for a growth differential. But basically, we were there because we knew that, because see, look at the today market moves. In US, it's only about tech companies. With those 5, 6 big companies, they are only driving.
So there it is, of course, a crazy.
Yeah, in India, it is led by financials. So someday we will follow the tech, but our digital side has done very well. In the tech, all the digital companies which got hammered post in last 12 months, I think they have come back very well.
Which is what I wanted to ask you. I mean, Zomato, I have read your reports and you all are very bullish. Yeah. Do you think that there is a second coming for, the Paytms, Zomatos, Nykas, everyone who was a marquee name in e-com?
No, seriously, they have a second coming. They are well funded.
But valuations are now...
Yeah. Well, it is very tough to figure out the valuation in a conventional way. Okay. See, if you do valuation based on P or something like that, there is no E. So what kind of P multiple you talk about? So it's all in the... first thing is it's the option value. Second, you have to also do a lot of adjustment in terms of trying to understand underlying value in the sense that their books don't have any capitalization of any expenses.
That is true.
So that you have to adjust in some way and then try to see, or maybe you see, say 4 or 5 years out, if you have the courage to see 4 or 5 years out for these companies and try to do some kind of conventional P multiple. So, but this is the frontier. This new tech companies like Zomatos of the world or Swiggy or Policybazaar, Paytm, I think these are the companies which will, I mean, they are well funded and I think they will have good time.
They'll cut fresh ground. Okay, let me come to the more conventional, the usual banking, the one that we should discuss because it's 40% of the market.
Yes.
Now, would you think that HDFC Bank, after the merger, may underperform because, there is a lot to lead? Would there be any worries? Would you rather bet on, ICICI or Kotak because of the fact that they have to carry a large load?
It's not about this or that. I mean, every bank has its own merits. This is the most successful bank in the last 25 years. And they have created, and the CEO has gone on record saying that we'll create another HDFC Bank in next 4 years. Yes. What more you want? I mean, your index is going to do 12-13%, and they're guiding for 18%, I don't know, top line or bottom line. Okay. But clearly, and so I think it's an outperforming stock. That doesn't mean that there is no other bank which can outperform. Okay. So I think in their own merit, this needs to be looked at very seriously because there is no everybody is kind of bit skeptical about their outlook. But look at what they've created and the way they are going about it. And this merger, post-merger, at the time of merger, there are a lot of readjustment of the ownership.
The worry is, I'll tell you what, I mean, we have always used to seeing HDFC Bank the best in margins among the big banks, the best in ROA among the big banks. Now they are second in both these aspects with respect to, if you compare it to ICICI Bank. I'm not still bringing Kotak because they have, it's smaller in size compared to them. So, you know, that worry is there.
But size, they are way above.
Size, they're way.
I mean, see,
double ICICI.
Yeah, the dominance in the marketplace. When you say that I'm at 10, 12%, 15%, 17%, you see in bad times. See, right, this is a good time. Yes. In good time, when the credit cycle is good, it doesn't really matter that much. But there is a little ripple in the economy, and then you see how this tall, big guys, they will stand up. And I'm not comparing HDFC with any other bank. I'm saying the HDFC alone, because they can't compare. Their size is different, their growth rate will be different, base effect is different. So,
but what about the disruption to housing finance itself? Because they were anyway very good in housing finance, and now you have cheap money, cheap raw material to boot.
Yeah.
So does that make life difficult for other housing finance companies? You should know it better. You have one.
No, I think they'll become super prime in the sense that it will be very difficult to compete with them, because now they have distribution of HDFC Bank as well as HDFC, and cost of money which is invincible. I mean, the lowest.
Life is tough for other housing finance.
Yeah, so they knew the game very well.
Yes.
See, a lot of time what happens is that you are actually not that good in housing finance, but the one thing they know very well is the housing finance. So the kind of cross sell they can do, so it's all promising thing, but how they execute on the ground, that we need to see over a period of time. But I think they will other super prime lenders, they have to be really cautious on that front.
You know, the other big disruption in the finance market, the non-bank finance market, is going to be Jio Financial. But that question after the break. We are back in a jiffy. Welcome back. With markets hitting all-time highs practically every week, we have with us the renowned market master Raamdeo Agrawal, whom we have been speaking with on several sectors. Raamdeo, before going to the break, I told you the other disruption in the non-bank finance market is the coming of Jio Financial. Is this a big disruption? Can it make life difficult for NBFCs?
Why? It's a 142 lakh crore credit market.
Yes, it is.
Growing at 15% minimum. So you're talking about 21 lakh crores every year you are underwriting, credit to be given. So in next 5 years, you are talking about 142 lakh crores more to be underwritten, if not even more than that. So I think there is enough for everybody. There could be some, you know, if particularly small narrow segment, if they want to enter, say consumer finance or something, there could be some rub off here.
That's the exact word that I was going to say. See, they have already Reliance Digital shops where they probably are now giving Bajaj Finance or HDFC Bank credit over there. Then they have this entire Reliance Retail where they can still have, you know, small EMIs, and they have the Reliance Jio, the telephone users. So there's a large captive audience they already have.
Audience is sure.
So can that make consumer finance disruptive? Which means if you have extra money, will you put it in Bajaj Finance or will you wait because there is a big competition coming?
I would not call it disruption, but definitely this new entity is worth watching. The reputation of the group is such that they don't do anything small. Yes. So I would, in fact, one of the things I would say that is that how they handle the 6.5% Reliance treasury shares. Is it a holding company kind of a share, on the like held forever? So then finally there will be a discount to the market price.
I thought the rules said that you have to sell treasury shares. I thought the rules.
No, that's why they have, I think, removed from the main balance sheet to the different balance sheet. They have different set of shareholders. Yes. So technically they have complied with that. Okay. But here, I mean, they can as well liquidate and create a capital for the finance company. Once that happens, if that is the indication, then what will happen is that the market will view it not as a holding company holding. Yes. It will look at it as a, you know, kind of a cash in hand, cash equivalent types. Yes. So then discount will tend to be lower. So that's one aspect of it. But rest all operationally, what they do, what is going to be is it going to be extremely digital? I mean, very widespread all over the country because they have 500
It's a
million.
different kind of lending that you can expect because of the...
So they have to, when they roll out the kind of product, services, which segment they want to be big, I think we are still waiting.
Yeah, but you know this business in a way, Raamdeo. So do you think that collection also is important? You have a very good, database to lend.
Yes.
But for collection, you still have to put feet on the ground. So therefore, I won't say it is a very big competition. Can that be your view?
No, digital lending, which is there so far, what we have seen, is very distributed in the sense that 10,000 bucks, 20,000 bucks. Yes. And the collection, physical collection is not that big a deal. No, it is about the underwriting, whom you give, what kind of data you have, so that you are sure that his intention and capability to repay is very good. And that's where all this analytics, AI and all this machine learning, those things are coming into play. And there I think they should be doing well. But it takes time even to master on that kind of technique. If you are doing unsecured, distributed across the country.
So it can only grow slowly.
Yeah, grow slowly. You cannot build it overnight. And by that time your economy is growing, the opportunity size is growing.
Okay. I'm coming to the economy is growing part in just a minute. What is your sense about the consumption space? Because you're talking so much about economy. Until now, for all the growth that we are screaming, it has been a premiumization growth. You can't get away from several signs of K-shaped recovery. But now we're getting into elections. There is an expectation that there could be income transfer schemes, something to help rural development. So how would you bet? Would you say that it's time to look at the lower part of the K, the consumer staples, or would you persist with premium consumption companies discretionary?
Yeah, so again, discretionary companies have definitely done well, all the jewelry companies and those kind of stuff. But lately, starting even March, April, this quarter for sure, we have seen the broad basing of the consumption in the sense that some demand has started coming from bottom of the pyramid also. If you look at the motorcycle demand, which is very categorized. Yeah. One side is a car, other side is a motorcycles. So
the June motorcycle numbers were not very impressive.
Yeah, but April, May was very good.
Yes, April, May was very
good. So let's see how now the pre-festival and festival, that will be the real big one. So if the monsoon is normal, crop prices are good, and MSP has been raised a lot, I would think second half should be very strong even for rural India. That's my sense.
Okay, so the lower part of the K will definitely get a boost.
Yeah, that should come in.
Okay, now let me come to this big India story. We have everyone writing that third largest economy by the end of the year, maybe a 7.5 trillion, doubling the size by 2030. First of all, do you think that the growth path looks that clear?
Yeah, it has been very clear in the past also. Just that this COVID kind of disruptions come and that delays the march of the Indian economy because lowest is say 5%, 4.5%, 5%.
Yes, lowest is 5%. But I always tend to compare that China, when they got the demographic dividend, were at 12 to 14. Now, of course, that was a different world when WTO was, they got included in WTO. There weren't such tariff barriers. But now we are only talking about 6.5, 7. Do you think that can get broken and we can do better?
Yeah, so just to put the statistics on the table, for last 25 years, India has grown at 9% dollar GDP growth. Nominal dollar GDP growth has been 9% for last 25 years. Okay, so I have no reason to believe that next 5-10 years also it will be 9% dollar GDP growth. So if you do 9% dollar GDP growth rate, you double
then you are doubling the economy.
8 years. 8 years, okay. Now, can we go from 10 to 11 or 12? That has to do with your current account deficit or surplus, where because of services boom today.
We are doing very well.
Very well, okay. So now you see last week our forex balance went up by $12 billion in 1 week. So, and we are sitting comfortably at $610 billion. So my sense is that the rate of depreciation of Indian rupee, if by chance we have a breather for next 4-5 years at 82, then your nominal GDP growth of say 11% or 12%, that becomes your dollar GDP growth rate. But whether it will happen or not, that because inflation differential is now again narrowed. But if they go to 2%, I don't think we'll be able to come to below 4% or 5%. So again, that pressure will start building up. But I think the outlook in next 5 years for a dollar rupee parity is pretty good. So I would think we have a chance to not only do 9%, but it could be 9.5%, 10%, 11% types. And that's why in China, when your export starts booming, whether it is services or merchandise, and your current account comes under control, clearly rupee dollar, your translation changes. So your entire nominal GDP growth rate becomes your real GDP growth rate. So that portion, that dividend,
that advantage will
yes, that we should get in next.
No, you actually put your finger on it. Last year, FY23, all economists were going with 3%, 3.3, 3.4% current account deficit. We've actually come in closer to 2.8 or 2.6%.
And last quarter was almost flat, isn't it?
Yes. Oh, last quarter was almost a surplus.
Yeah.
And this year, almost everyone is sitting at 1.4. You know, our historical number is 2.5. And for the current year, everybody, including Nikhil, will be talking about 1.4, 1.5 current account deficit. So it's clearly come under control. We, of course, can get hiccups from crude. But to just come back to the, the original topic of where the overall markets are headed, we've covered a lot of ground this year. So immediately, is there a fear that, yes, 20,000 is like, today, tomorrow types. But after that, things will start slowing a bit, either because of global headwinds or because we are already sitting at elevated valuations?
I would give a lot of credence to the current earnings season. If by chance earnings come better than what street is expecting, because a lot of results are yet to come. PSU banks can clearly surprise. I mean, 100%, 120%. So those will like SBI, the big daddy is yet to come. So
that is expected to be the blowout number.
Yeah, but that adds up in the aggregate. And if aggregate without X or something, if Nifty EPS goes up by 25% in the first quarter, I think we have then steam.
Okay, I'm being warned I'm out of time, but one sector I have to push in, power. We never talk about these kinds of sectors, but smart metering, and then this pump for hydro electricity companies to make them kind of 24 hours. And some reforms even in collections. You think you would go to a sector like that?
See, still the return on that particular investment is capped at 12% or something like that. So the return finally, unless you have a lot of merchant, a lot of renewables, where ROI, this thing on equity could be as high as 18, 20%, 22%, where the significant portion of your profit. So your ROE has to go up from 11, 12%, regulated 11, 12% to more like 18, 20. Otherwise, re-rating will be, it will be very.
So rather than buy power, buy AC companies.
Yeah, I mean, you can find a lot of other proxies, but it is very interesting time because power sector is running at full capacity, and we need very immediately addition of the capacities. So I think it's a boom time for power companies.
Okay, but the calculations we should remember when we pick companies. Take your point. I've not run out of questions, but we will invite you on another day when the Nifty and the Sensex scale another milestone, which looks like a regular affair now. Well, that's it on this very interesting edition of Market Masters. Thank you for watching.